Imagine waking up to discover that $500 million worth of XRP just ran out the door in 1 month, kind of like your pizza delivery guy deciding to keep the extra slices. That's right, South Korea's gigantic exchange upbit has seen an eye-watering $500 million in net XRP sell volume. If XRP were a party, it looks like everyone just left and took the punch bowl with them. Hello fellas watching around the world, welcome back to another adrenaline-fueled update from Zaki Crypto Update, your best crypto plug. I'm Zaki, here to guide you through the wildest twists and turns of the blockchain galaxy. If you're new here, smash that subscribe button and ring the bell so you never miss a beat in crypto's electrifying saga. Stick around because by the time this video wraps up, you'll know why Korean traders are suddenly ditching XRP like it's last season's sneakers, what it means for the token's next move, and whether this sell-off could be your golden opportunity. Plus, I'll share my hot take on what XRP bulls need to see before they jump back in. Trust me, you'll want to watch until the very end. If you're finding value already, drop a like and subscribe right now. It helps the channel grow and ensures you get all the latest market insights ripped straight from the blockchain. Data guru and order book wizard Dom recently uncovered that the XRP/KRW pair on Upbit has witnessed a net sell volume of 220 million XRP since April 11th. At today's price of roughly $2.14, we're talking about nearly $470 million exiting the market. Add in a little extra trading flair, and that rounds up to a cool $500 million USD. That is not small potatoes, it's like the entire population of a small Caribbean nation deciding to short XRP all at once. What makes this even more eyebrow-raising is the chart Dom shared. The cumulative volume delta metric started at 0 on April 11th, then nosedived below -100 million XRP by late April, and now sits at -220 million XRP as of early May. If delta were a fitness tracker, XRP would be clocking the most steps away from buy orders ever recorded. My opinion? The cold shoulder from Korean traders signals a broader shift. It's almost as if they collectively read a rumor about an incoming SEC appearance, grabbed their tokens, and bolted for the hills. When one of the world's most active trading communities tucks and rolls out, it adds serious weight to a bearish trend. But these sell-offs aren't confined to South Korea. Over on Binance, the XRP spot CVD fell from -1.876 billion XRP on April 6 to -2.207 billion XRP by press time, an additional 330 million tokens sold in a month. That kind of volume makes a whale look like a guppy. With XRP trading just above $2 and having slipped beneath the psychologically crucial 2.20 support level, bears are tapping their paws impatiently. They're waiting for confirmation that sellers have exhausted their ammo and that buyers might finally regroup. Bulls, on the other hand, are dreaming of a market-wide recovery to trigger a rebound. Here's where things get interesting. Remember back in July 2023 when Ripple scored a victory in its SEC lawsuit? Korean traders went berserk, sending XRP from around 70 cents up to 93 cents almost overnight. The world's biggest bonfire sale, with massive buy volumes lighting up the charts. That rally underlines how Korean investor behavior has historically dictated XRP's short-term direction. When they buy, prices soar. When they sell, prices plummet. Right now, their bearish disposition could cap any runaway rally until sentiment turns. So what's behind the sell pressure? A few possible culprits: profit taking after the late April mini bounce. Those who bought lower are locking in gains. Traders are reallocating to other altcoins or back to Bitcoin and Ethereum. After all, diversification never killed anybody. Regulatory jitters, with whispers of fresh scrutiny from domestic authorities. Even a hint of uncertainty can spark a stampede out of a token. My hot take is that it's a combination of all three, and that the biggest factor might be profit taking. Anyone who scooped XRP under $2 has been sitting on a retinal burner gain by the time it poked above 210. It's only natural to lock in that profit, especially in a market where volatility can go from 0 to 60 in seconds. So, what would get bulls back in the ring? A couple of catalysts to watch: a successful reclaim and hold above the 2.20 level, ideally with volume that makes traders take notice. A fresh uptick in Korean buy-side activity, perhaps news of new trading pairs or fiat on ramps that entice local investors. A broader crypto market rally, sending altcoins higher en masse. When BTC and ETH catch a tailwind, smaller tokens often ride shotgun. Until at least one of these happens, expect the bears to keep sniffing around the gates. But remember, the bigger the sell-off, the juicier the rebound when sentiment finally shifts. If you love nerding out on order books like I do, take a peek at the depth charts. Currently, there are sizable sell walls around 2.25 and again at 2.30. That suggests sellers are lining up to offload even more if XRP tries a relief rally. On the flip side, there's decent support at 2.05 and a stronger floor near 2.00. Bulls will need to break through those sell walls before considering any serious entry. Over on CoinGlass, we can see the funding rate for XRP perpetual futures is slightly negative, indicating more short position pressure. That aligns with the bearish narrative. But note that negative funding rates can also set the stage for a short squeeze if buyers step in aggressively. It's a double-edged sword that could whip both ways. Zooming out, global markets are digesting multiple macro factors: Fed interest rate outlooks, geopolitical tensions, and economic data from the US and Asia. Crypto doesn't exist in a vacuum. A dovish signal from the Fed could restore risk appetite, lifting altcoins, while hawkish commentary might trigger another bearish wave. Keep an eye on the economic calendar. XRP's next big move could be correlated with traditional markets. For those of you who love spotting potential buys in a bear market, this could be an intriguing entry zone. Buying into weakness requires nerves of steel and a clear risk management plan. You might consider scaling in around $2 or lower, with stop losses just below the $2 mark. If you're aiming for a swing to 2.30 to 2.50, that's a tasty potential return, but only if the broader market cooperates. Never go all in on a single trade. Diversify and size positions based on your risk tolerance. This is not financial advice. Financial advisor. Crypto markets are volatile, and you should always do your research before making any investment decisions. If you enjoyed this deep dive, hit the like button and subscribe before you go. Your support keeps this channel alive and kicking, plus, it's free and only costs you a click. Thank you for watching Zaki Crypto Update. I appreciate every one of you for tuning in. Check out the videos on your screen right now for more market breakdowns and trading strategies. Until next time, stay curious, stay cautious, and keep hodling those insights. Peace out.